Let's say you've done an awesome job saving for your retirement and you've saved $1 million in your RSP. Well done. But how much of that money is really yours? And how much did the bank get paid in management fees? And let's assume that you're in a 30% tax bracket when you start to withdraw this money. 30 cents on every dollar is going to the government. People like these plans because they can get a tax break on the money that they contribute and reduce their taxable income. If the government really wanted to give you a tax break, all they would have to do is lower the taxes. Pay attention. Today could be the day to discover and learn how to create a tax-advantaged retirement income. If you retire at 65, you're likely going to be collecting your CPP and old age security and maybe a company pension plan, putting you possibly into a higher tax bracket. Are you aware that the government is changing the old age security age from 65 to age 67 in 2029? Your banker told you when you retire, you'll be in a lower tax bracket. Well, there's only one way to be in a lower tax bracket. You have to have little to no income. I know taxes are unavoidable, but that doesn't mean that you can't be smart when it comes to paying them. There are still legitimate strategies available to minimize your tax bill, therefore minimize the stress that you put on your assets and enjoy a tax-advantaged retirement lifestyle. Here is one thing you've never heard about and your banker doesn't want you to know about it either. The number one safest place to protect your money that's tax-advantaged, where you can never lose it, is tax-exempt dividend-paying insurance. Sound too good to be true? So did the cell phone. Now everybody has one. I know what you're thinking. Boring. I don't need life insurance. What good is this? Stick with me. This kind of insurance no one has ever told you about. It's a fixed income asset designed to maximize cash, minimize tax, with the least amount of death benefit. Our participating whole life policy paid dividends each year since 1848 in Canada. And it's one of the most powerful investment strategies out there. Where do you think the wealthy save their money? When designed properly, you can take the dividends in cash, use them to pay premiums, or what most people do is use them to increase the cash value and the death benefit of their policy to create their own private pool of capital. With an unbeatable track record where your money is safe and secure for over 175 years, current dividends are paying 6 to 7%. Are you getting this yield on your stocks or your mutual funds? Dividend-paying insurance has survived every stock market crash and recession and has never failed to pay its investors a dividend. Wondering why your banker hasn't told you about this? You should ask them. This is a huge cash help for retirees all over Canada, meant to ease their stress and help fund their retirement, reduce their taxes, and live the retirement lifestyle that you've always dreamed about. Where can you learn more about this investment strategy to help you secure the safety and security of your money without the risk of losing it? Go to McGuireFinancial.ca and access my free video. Subscribe and hit the notification button if you're new to It's Your Money, and never miss an update.